Bonjour tout le monde. Ladies and gentlemen, good morning. Welcome to this press conference on our 2018 trade forecast. With me on the podium is Director General Azevedo. To the DG's right is our Chief Economist, Bob Koopman, and to Bob's right is our numbers guru, Coleman Nee, who has been the point person on this work. The DG will give a brief statement. He'll take a few questions. The economists will be available to you afterwards to answer any questions you may have on the release. Without further ado, just to remind you again, the press release is under embargo until 12 noon Geneva time. Director General, you have the floor, please.
Also, welcome everyone to this press conference. Good morning. We've all seen, I suppose, the press release already, so I'll just highlight some of the key points as I see them and say a few words about the broader context that we see. The outlook that we are publishing today is quite positive. It reflects the stronger economic growth that we are seeing in both developed and developing countries, and which is forecast to continue. But let me clear, these forecasts do not, and I repeat, they do not factor in the possibility of a dramatic escalation of trade restrictions. Our aim is to highlight the main factors currently driving trade and suggest possible outcomes, not to peer into a crystal ball and predict possible policy decisions. So first, let me run by our assessment of the performance to date. Then I will examine the outlook for the coming years. I will come back to the developments of recent weeks later on. So in 2017, trade growth was very strong. The volume of world merchandise trade grew by 4.7%. And this significantly exceeds the 3.6% that we forecast in September of last year. And this is the fastest rate of expansion since 2011, when the global economy was still rebounding from the financial crisis. Growth for the year was up sharply from the very disappointing 1.8% that we saw in 2016, when both developed and developing economies recorded slow GDP growth and weak import demand. In 2017, developed economies' exports and imports grew 3.5% and 3.1% respectively, while developing countries recorded export growth of 5.7% and import growth of 7.2%. Now, this strong performance was largely driven by cyclical factors, as world real GDP growth picked up to 3% from 2.3% of the previous year. Now, economic activity was in turn driven by increased investment spending, particularly in the United States, and rising consumption, notably in Japan. Investment in particular is highly correlated with trade because it has a very significant import content when you have investments taking place. Meanwhile, China and the EU, the European Union, they maintained a more steady pace of expansion, providing, I think, a bedrock for global demand. Now, all regions, and I have to stress that, all regions contributed to the trade recovery in 2017. The main contributors were the Asian economies, which together contributed 60% of the volume increase in imports and 51% of the increase in exports. Now, I recall that all of this that we're doing is looking at trade in terms of volume. Now, trade growth was even stronger when we measured in US dollars, reflecting both higher quantities and rising prices. Now, world merchandise exports in 2017 were valued at $17.2 trillion, up 11% on the previous year. So in terms of value, exports were up 11% compared to 2016. And in services, in commercial services, exports were measured at $5.25 trillion, so that was an increase of 7%. So let me now turn to the forecast of 2018 and 2019. Now, continuing from last year's strong performance, we see economic conditions converging to allow sustained growth in trade and in output, and that applies for both this year and for next year. Consumers and business confidence have turned upwards, and economic growth is synchronized across all regions, and this is very important. When all of these cylinders are aligned and when they are firing together, the engine performs much better. We therefore estimate that world merchandise trade volumes will grow nearly as fast in 2018 as it did last year in 2017, with growth about 4.4%. And we expect that growth will remain quite strong in 2019, around 4%. So this is good news. It represents the best run of trade expansion since before the crisis, supporting economic growth, development, and job creation around the world. But of course, risks to the forecast are significant, and they are predominantly on the downside. Monetary policy is likely to become less expansionary, and financial conditions may become tighter, and this could produce some volatility in markets and capital flows. Now, to reflect this uncertainty, we place these forecasts within an indicative range of possible outcomes. However, I stress again that even this range does not take into account the more significant risk before us. So now let me turn to the rise in tensions that we're seeing between some trading partners. Some measures have already been implemented. Some are still proposals. The possibility of further escalation remains hypothetical at this stage, but a reality nonetheless. However, it seems that even the threat of further escalation may already be having an effect. In March, purchasing managers' indices indicated a slowdown in export orders. At the same time, a separate index of economic uncertainty has risen. It is not possible to accurately map out the effects of a major escalation, but clearly they could be serious. A breakdown in trade relations among major players would derail the recovery that we have seen in recent years, threatening the ongoing economic expansion and putting jobs at risk. It is an interconnected economy, and in this kind of economy, the effects would be globalized, reaching far beyond those countries who are directly involved. Poor countries would stand to lose the most. So we have to do everything we can to avoid further escalation. I have been urging WTO members to take every action possible to avoid going down this road. The WTO was created as a forum for members to hold each other to account, and they have been doing so effectively for many years. We must safeguard the strong growth that we are seeing today and ensure that trade remains an engine for economic growth, job creation, and development around the world. So thank you all very much. I will take a few questions. I don't have a whole lot of time, but to the extent that I can, I will try to respond myself. If some types of questions maybe would be best addressed to the economists who are to my right. After I answer a few questions, I'm taking off for other commitments, but they will stay with you to further elucidate the contents of the report.
La première question est pour Catherine et puis Brice. Catherine, vous avez la parole.
Merci. I'm here. Yes. Catherine Fiancambo-Conga pour la télévision chinoise CGTN. Monsieur le directeur, vous venez de parler de risques, de tension, d'une augmentation de tension entre des partenaires majeurs. Est-ce que vous considérez qu'une guerre économique, commerciale a déjà débuté?
Well, there are several levels to this answer. I would say that technically, I would say no, we're not there yet. There are still a number of measures that have been announced but not implemented. There are conversations and dialogues ongoing between these players that you just mentioned. That's technically. Politically, I think we might be seeing the beginning of that. And that's exactly what I have been urging members to try to avoid.
Bryce, you have the floor, followed by Tom.
Thank you, Director General. Peter Navarro and Wilbur Ross, they want countries to balance their trade deficits with the U.S. and agree to reciprocal tariffs. Do you believe this approach to trade is misguided? Thank you.
Well, it's their call. It's their view. I think they're entitled to that. I think we live today in a very interconnected world. About 2/3 of trade is connected somehow to the global value chains. So the previous perception of what a trade deficit or trade surplus meant has to be looked under different lenses in today's world. I think we cannot be very simplistic about these things. We have to look at the nature of the trade surplus and deficits. I'm sure they're doing that, but I cannot second guess what their conclusions are from that exercise.
Tom, you have the floor.
Thanks very much. Tom Miles from Reuters. A question about sort of threat to the WTO system as a whole. I wonder, there's a new U.S. ambassador in town, and I wonder whether you've had reassurance from him, and especially I wonder about the U.S. 301, Section 301 tariffs case. Many observers think that the U.S. would need DSB approval to go ahead with these tariffs after a previous WTO ruling. Have you talked to him about that? What is your view about whether or not the U.S. has got the right to go ahead without DSB approval? Thanks.
It's a lot of things in your question. I'll try to cover as I remember. I did already have a first contact with the new U.S. ambassador here in Geneva. Actually, we met before that, and where he presented his credentials to me outside Geneva. But we did already have one conversation here in Geneva. I didn't hear anything that conflicted with what I had already heard from my previous contacts with the U.S. administration. The U.S. Has been engaging at several levels here in Geneva, particularly with dispute settlement, where they have been bringing cases to the WTO. They are making proposals in negotiations. They are participating in conversations about issues like e-commerce. They are negotiating fisheries subsidies. They're sitting down. That engagement is going to continue, as I understand. I have heard also from the United States the assertion that the WTO is an important institution. It has delivered many benefits to the global community. I have also heard the U.S. being very critical and claiming that we need to improve the dispute settlement system, we need to improve the disciplines. Well, that's their expectations. I think other members are talking to them, and it's about the members that they have to figure out what is the best way forward. Now, those conversations are happening both in the WTO and outside the WTO, as it normally is. So we had conversations about these tensions, about these measures and these threats at the General Council. We had it at the Dispute Settlement Body. We had it in the Safeguards Committee. We had it in the Goods Council. They're happening everywhere in the organization now. Consultations are happening. They're talking to each other. But also outside the WTO, I think they're talking to each other. They're engaging at some level. We're not privy to that kind of engagement, what exactly happens outside the WTO. But that's the way that it's always done. The WTO, I hope, will continue to be a forum for engagement and conversations. But if the members want to talk outside the WTO directly to each other, that's also welcome. What is important is that they do talk to each other.
One more? 301?
Mm-hmm. Yeah. Oh, the 301. Well, it's already, well, members have different views about these things. I cannot say which member is right, which member is wrong. What is important is that they are talking, they are consulting. There was a request for consultations on that particular measure, and if I'm not mistaken, they have 60 days before action is taken in terms of litigation, and that period is ongoing. Let's see what we see as an outcome of that.
The next question is for Jamil, and then the last question for Madam Zhang.
Mr. Azevedo, Jamil Shah, do Estado de São Paulo. You mentioned first the issue of the fact that the poorest will lose the most from this trade war. We've seen in Brazil some sectors, such as soybeans, celebrating basically the fact that they could export more to China. What is your message there? And secondly, how can the current political crisis in Brazil affect trade and growth in Brazil? Thank you.
Sorry. So I'll repeat. The first part of your question, every time that you see turbulence in terms of trade and that measures are put in place, there are sectors that are happy about it, and there are sectors who are unhappy about it. That's the nature of the situation. Now, having said that, what the WTO as an organization is concerned is about the systemic effect. It's about the overall outcome. And the situation is that if we do see the rise in tensions and these threats being announced here and there, the probability is that the volatility of markets is going to accentuate, that the unpredictability of investments, for example, is going to have a dampening effect on economic growth, on job creation, and that's what concerns us. And we hope that we tone that down as much as we can, because we do not necessarily have to see measures come to the implementation phase. Even before they are implemented, markets react and the economy may be affected. Now, the second part was about political instability. I'm not in a position to measure up how the actual effects would materialize in the case of Brazil, but obviously investments and economic growth benefit from political stability. So the more stability you see, the better it will be for the country.
La dernière question est pour Madame Zhang. Madame Zhang, vous avez la parole.
Merci. Zhang Jinghao de Radio Chine Internationale. Bonjour, Monsieur le Directeur Général. J'ai une question sur la Chine. Alors, comment évaluez-vous les efforts et les contributions réalisées par la Chine pour promouvoir le commerce multilatéral au cours de ces dernières années? Merci.
Oh, I think China has been a very active WTO member. has been participating in pretty much all conversations, negotiations, defending its interests, which is normal. Every one of the 164 countries does precisely that. I think China has announced several times that it is supportive of the system, that we will continue to engage within the framework of the WTO, which is very much welcome. I hope that China will continue this kind of engagement, will sit down constructively, discussing with other members issues that have been raised also about Chinese practices and regulations, and I welcome the disposition of the Chinese government to sit down and talk and discuss these issues seriously. Thank you.
Thank you.
Thank you all very much.
We leave you now with Bob and Coleman. Thank you again.